Hi, my name's Vish and I'm one of the finance brokers at Momentum Wealth, and I'm here to talk to you a bit about fixed rates and whether it might be the best option for you. The main benefits of fixing your home loan, the first being the certainty of repayments. A lot of investors do like that certainty of repayments, especially if they're expecting a change in their circumstance, be that expecting a child or a decrease in salary. Another situation is potentially if they're looking to save, it gives them pretty good budgeting. And the second main benefit would be the fact that if interest rates do rise, your interest rate's obviously going to be lower than potentially the rest of the market, and you're going to be paying less over the life of the loan. There are a few disadvantages to fixing your home loan, and it is extremely important for investors to recognise this before making any decisions. The first being that by fixing your home loans, you do lose a lot of flexibility. If you were planning on selling, refinancing the property, or making any changes to that facility, you could quite potentially be up for some hefty break costs, which ultimately we don't want to see investors paying. The second main disadvantage of fixing your loans is the simple fact that if rates do go down, you're obviously potentially going to be paying a higher interest rate than the rest of the market and more interest over the life of the loan. The third disadvantage that a lot of investors find with fixing their loans is the fact that you lose the offset facility. The offset facility is something that a lot of investors find important to them, especially for people who have a fair amount in their savings. They're able to offset against their interest rate, so that's another thing that people have to take note of. Some of the alternative solutions that we might recommend to investors really again depends on the type of investor that we're dealing with. So for someone, for example, with one property, we might look at the option of splitting the loan so that part of it's fixed and part of it's variable. For someone with large, complex property portfolios, we might look at fixing a few of the properties and loans attached to them and keeping a few of the loans and properties variable. This way they do have that overall flexibility of their portfolio. At the end of the day though, the bottom line with loans, products, rates is the fact that it is tailored to the individual and everyone is going to be different. This really does highlight the importance of sitting down with your advisor, especially in the lending market the way that it is at the moment, so that you can identify the best way moving forward.